In today's video, we will discuss the absolute basics of technical analysis, the support and resistance levels. We will discuss why support and resistance are so important. I will show you how to identify them properly, and we will discuss the key difference between support and resistance levels and support and resistance zones. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Let's start with the definition of a support. Key support is a historically significant price level or the zone that is lying below the current prices of an asset. And here is the example of a key horizontal support. You can see that in the past, that support was respected by the market multiple times, and from that we saw strong bullish reactions. And of course, in future, once the price will test that support, we'll expect a similar bullish reaction. While a resistance is a historically significant price level or the zone that is lying above the current price levels. Have a look at Euro Aussie pair. Here we see a great example of a key horizontal resistance level. 2 times in a row the market dropped from that in the past, confirming its significance. Traders, don't miss a big sale. Get a 40% discount on the lifetime access to my premium group. Get the lifetime access to my daily live streams. Get my course and the book explaining to you my trading strategy. And as a bonus, get a lifetime access to my VIP signals group where you will get the signals with entry, stop and target. For more info, check the link in the description below. And of course, once this level is reached in future, we will expect a similar kind of reaction. From a key resistance, a bearish movement will be anticipated in future, and from a key support, a bullish movement will be expected after its test. From time to time, the market breaks key levels. Key supports become the resistances after a breakout. Here you can see the example of a breakout of a key support. After the breakout, the broken support turned into resistance, and when the market tested that, from that broken structure, a bearish movement followed. And by the way, the broken structure here is also the zone, but we'll discuss that later on. Always remember that in order to confirm a breakout of a key support, we strictly need a candle close below that. And here you can see the example of a key horizontal resistance that turned into support after a breakout. Always remember that in order to confirm the violation of a key resistance, we strictly need a candle close above that. Quite often newbie traders ask me how many times the price should react to a key support or resistance in the past to make it valid. I do believe that one time is more than enough, but make sure that the reaction, the movement from that key level is strong and significant. Here are the support and resistance that I spotted on pound CAD pair. Both structures were respected by the market just one time in the past, but the reactions to these levels were very strong. For that reason, we can say that these structures are the key levels. However, the historical significance of a support or resistance is not enough to make it valid. What matters to us is the most recent reaction of the price to that. Remember a simple rule. If a structure is not respected by the buyers and then by the sellers after the breakout, or vice versa, by the sellers and then by the buyers after the breakout, such a structure lost its significance. Such a structure is not a key level anymore, and you should not rely on that in future. Here on Aussie Yen pair, we can see a key horizontal resistance, the resistance that was respected 2 times in the past, and from where we saw 2 significant bearish reactions. However, you can see that with time, that resistance lost its significance, and the market stopped reacting to that. That structure was neglected both by the sellers and then by the buyers, and for that reason, that key resistance lost its significance. This level is not a key level anymore, and for that reason you should not rely on that in future. Key supports and resistances lose their significance with time, and your job as a trader is to be flexible and to adapt to changing market conditions, constantly updating your analysis. Always remember that the financial markets are not perfect, and the price will quite rarely respect the key supports and resistances that you spotted. Quite often the price will fluctuate around key levels, and for that exact reason, it is highly recommendable to not rely on just key levels, but to rely on the zones that are based on key levels. I recommend taking into consideration not only the exact level from where a strong bullish or bearish movement initiated, but also the candle close level of that candle. For that reason, we have a support zone right here that is based on the candle close level and the wick. Quite often there will be the situations when multiple key levels will lie very close to each other. In such a case, I recommend uniting all these key levels into one single area. On a pound-dollar pair, we see multiple key horizontal resistance levels. We will unite all these levels into one single zone. The upper boundary of that zone will be the highest wick, and the lower boundary of that zone will be the highest candle close. And here we see two horizontal structure supports that are lying close to each other. We will unite these zones into one single area. The lower boundary of that area will be the lowest wick, while the upper boundary will be the lowest candle close. That will be our support zone. Now a couple of words about the time frames. Of course, you can identify supports and resistances on any time frame, but the rule is that the higher is the time frame, the stronger is the structure, the more significant are support and resistances that you identify there. In my analysis, I primarily rely on supports and resistances on a daily time frame. Here is how the complete structure analysis should look like. When you look for key supports and resistances, make sure that you identify at least two resistances and two supports, and make sure that you underlined support and resistance zones. The structures that you identified will be applied as the entries, as take profits. They will be applied for stop loss placement for different trading strategies. Remember that the support and resistance levels and the zones are the main element of various trading strategies. For that reason, it is so important to identify these structures properly. Let me know, traders, in the comment section if you have any questions. Also, traders, don't forget about Big Sale. If you want to learn how to trade, it is the best moment to join my premium group. For more info, check the link in the description below. Also, traders, do not forget to watch my other videos.